It's about that time of day again. My name is Joseph. Monday evening, September 10th. Welcome back to your nightly newsletter. My job is to help new traders earn consistent profits using a simple and reliable trading strategy. And my plan this evening is to identify the most reliable trading opportunities setting up for tomorrow's trading session. And tonight I'm covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, oil is bearish and trying to retest last week's low. And I have my eye on some selling opportunities off the high of a channel, and I'm trying to combine with a key reversal line level of resistance. The S&P is range bound tonight, so I'm looking to buy the low and sell the high using the two-try rule. The Nasdaq is also range bound, but has a triangle pattern, so triangle tells me to fade the breakouts in the short term, but look for the breakout in the long term. We'll take a look at that chart in a moment. Gold is bearish with an almost flat channel, which is a huge clue. It tells me to focus on failures for selling opportunities as high as possible tomorrow. And of course, we can't forget about the euro. The euro is bullish with a strong bullish reversal, and that tells me to look for buying opportunities on a hidden channel tomorrow morning. Get a great looking chart there on the gold and the euro, so stay tuned for that for more tonight. Well, we're back in the action for a new week filled of profitable, reliable trading opportunities. And as always, I got another great newsletter in store for you guys and gals and a clear path of attack for tomorrow morning. Before we jump into the charts, before we put the plan together for Tuesday's session, I do want to remind you, if you're watching me this evening on YouTube, you can find a detailed description of this entire strategy. It's written out right here on my blog, right below the video tonight. You can find the entire text right for this video right below the video tonight on this blog at Sideways Markets. I'll put all the links in the description of that video. Also, if you have any questions about anything covered in the video tonight, please remember you can post them in the comment section below. And if you like what you see, please help support this channel by subscribing, and don't forget to hit the bell icon so you get notified every time I post another video. Oh, and if you want to stay in tune with everything we do here at School of Trade, if you want to make sure you never miss another video, make sure you go over to sidewaysmarkets.com. I'll kind of put all the links in the description of the video here on YouTube, and join our mailing list. That's right, upper left-hand corner. All I need is your name and your email address, and I will put you on my list, and I'll email you that. Right, I'll email you heads up anytime I publish something new. If you're on social media, don't forget I got Stock Twitch, Twitter, Facebook, LinkedIn. All my favorite channels are in the lower left-hand corner. If you're hanging out on social media, I'm always posting exclusive content there you won't find anywhere else on the interwebs. And then don't forget all the charts from tonight's video. How easy is that? All the charts that you see me drawing on tonight on the video tonight, you can find those easily to download. Right, follow that link below the video on the blog. And then how about tomorrow, free pass? If you're not a member here at School of Trade, right, I got a free pass for you to come out and join the trade room every day as a guest. Grab that free pass in the upper right hand corner, and I'll see you tomorrow as a guest in the trade room. And if you have any questions, you can always call, email, or don't forget, we always have live support on the right hand side of the website. Hit me up on live support if you have any questions. All right, boy, great to be back here. Hope you guys had a great weekend out there. Football back on television. Boy, oh boy, oh boy, what a great weekend it was. Beautiful weather. Weather's changing, though. Weather's changing. It's changing pretty fast if you're on the east coast of the U.S. right now, that's for sure. Let's take a look at the schedule for tomorrow, see what we got going on for tomorrow. Tomorrow's Tuesday, September the 11th. That will most likely ring a bell for you guys. Tomorrow is, of course, September 11th, right? The anniversary of the attacks on September 11th of the World Trade Center Twin Towers in New York City, also known now as Patriots Day, right, which I love that name, Patriots Day. It's a great name for September 11th. So tomorrow, of course, will be a day filled with a lot of emotion, a lot of reflection. I'm sure that we'll see a lot of tributes done on the news media tomorrow. It'll be a distracting day tomorrow. But one thing we do have for tomorrow, though, is some big opportunities coming early in the session tomorrow morning in the markets. There's no major news tomorrow. As you can see, there's no real major news tomorrow. We get that JOLTS report at 10 a.m., but honestly, I don't expect that news report to have that big of an impact. Just so you guys know, I do not need any news at 10 o'clock. I'm always expecting there to be something at 10 o'clock. 10 o'clock in our trade room, we call it the 10 o'clock shock. It is notorious for, it's kind of that time between 9:30 and 10 o'clock Eastern time. The opening drive is passed between 8 o'clock and 9:30. 9:30 to 10 o'clock is usually going to be a bit that chop and slop. And then usually after 10 o'clock, normally we get a nice big breakout up, down, right? Usually get some good movement after 10 o'clock. So tomorrow morning, I'm looking for trades early. I'm looking for trades late. There's really not much in our way tomorrow. Again, really the only variable tomorrow is, are people distracted because of Patriots Day tomorrow? The last couple 9/11s, the last couple September 11s have not been that bad. They've been pretty good. So I have no reason to think that tomorrow will be any different. Now, tomorrow's wide open. We got a lot of news, though, towards the latter half of the week. We got inflation on Wednesday, inflation on Thursday. And of course, we got retail sales and manufacturing on Friday. So got a lot of news here Wednesday, Thursday, Friday. Make sure you stay tuned for the rest of the week on this newsletter, and we'll talk more about how we plan to trade Wednesday, Thursday, and Friday as well. For now, though, tomorrow, Tuesday the 11th, nothing on the counter tomorrow, again, except for the simple fact that it is a day of remembrance for a lot of people around the world, not just right here in the United States. All right, let's jump into our charts here for tonight, getting ready for tomorrow's Tuesday session. I got crude oil, S&P, Nasdaq, gold, and of course, we'll wrap tonight on the euro. Crude is bearish with a channel, a reversal line, and a no trade zone on the chart this evening. This bear channel has nice rotation, right? Tells me the bears have momentum on their side right now. And it also tells me that I should be looking for selling opportunities off the high of that channel, selling opportunities off resistance levels above the high of that channel, right? Now, of course, there's a reversal line here. Not really the most obvious reversal line, but it looks like there is some support in and around this, let's say 80 to 90 area right there. That could be as high as that level, could be as low as that level. I would say this area right there. Again, we'll call that between 82 and 85 or so. Don't get too wrapped up in the exact numbers. These are all just, the number itself is rarely going to be exactly that number, right? But that would be an interesting area to be able to use as resistance, right? So bear channel tells me sell off the top of that channel. Bear channel tells me momentum on the side of these bears. I want to sell at resistance. Now, of course, let's not forget that last Friday, right? Where are we trying to go here right now? Let's just back out real quickly here and give you guys a bit of a bird's eye view here. Yeah, let's not forget, right? This is last Friday's non-farm payroll report. Last Friday's report gave us that big bounce, right, off of what was really just a horrendously bearish week, right? It was a really strong move down for those bears. So the overall bearishness of this market was interrupted last Friday, but as you can see here, the buyers, what did they do? They couldn't hold the pullback, right? They couldn't hold the pullback, and look what happens. The bottom completely falls out of it. And where are they trying to go? We have to assume they're trying to hunt for, right? They're hunting for that 66.86 and maybe beyond, right? We may find our way back down to those 65, 66 areas here by the end of the day tomorrow. So what I want you to see here, though, is that even though we are bearish, we do have an objective, right? And the objective is likely going to be around that 67 even area. Why is that important? Why is it important to know where the objective is? Well, it's important to know because if we go lower here, I don't want to sell down here, right? The closer we get to that objective at 67, the retest of last week's low, the more important it's going to be that we bounce and sell high. We'll talk a little more about that on gold here in a second as well. So the bears have control. We know where they want to go. They want to go down to that 67 area, right, down bottom. We know we have a channel. We know we have a reversal line, right? So now all we got to do now is just wait for price to get where we want it to go. And again, it's also important to remember, right, we have a large storm approaching the east coast of the United States right now. What is it? Hurricane Florence, I believe it is. It might be a tropical storm at this point, but some pretty nasty images you're seeing on the headline news here this afternoon. So it doesn't appear that the Hurricane Florence or Tropical Storm Florence is in direct path of the Gulf of Mexico like we saw last week. But anytime we hear about a hurricane, anytime we hear about OPEC, you always know that oil tends to act a little bit funny. So we're going to be keeping our eyes open. We're bearish right now, But who knows, right? The National Weather Center says this just in, Florence is hooking left instead of hooking right, and all of a sudden now, right, we've got some big oil refineries, Louisiana, right, the Gulf of Mexico there could easily get smacked to your good if it's that strong of a storm. So we're going to keep our eyes open on that as well. So we're bearish right now. I want to sell high. I've got some key levels of resistance waiting here overhead, and I'm going to sell as we go higher. What type of patterns could I use to get into, right, this selling opportunity? Well, anytime we go to the high of a channel, we are usually going to wind up seeing patterns that look like this. Right? It kind of looks like the letter M, right? Up, down, right? In other words, we'll see it push higher. Now that push higher will get us above that moving average, right? The buyers will then try to come in and buy the pullback, right? Like buyers do when you're getting higher highs and higher lows. The problem though is the market's not the market's not bullish, right? It's a bear market right now. So the odds are not very good that that's going to be successful. If they fail, that's my first opportunity here now to sell. You're selling off resistance in a bear market with a nice big wide open space now, right down to that target down at 67. So that's going to be our first opportunity here. I call this a one try, two try failure. One try, two try failure. Strong move down, right? One try, two try failure. That's the first one. Now from there, we don't want to sell low. Remember, we want to sell high in a bear market, right? Sell high and sell at resistance, right? Another option here now is I can connect those two lows, wherever those two lows are, by the way. I don't know where they're going to be just yet, but connect those two lows, right? Find up at that high, and then look for that sell off the high of that channel. And a lot of times you can combine, right, that prior swing, right, much like I'm trying to combine that swing here as a reversal line, you can combine that as well for a sell. So again, it's going to be a two-try failure into a bear strength, into a bear pullback. Two-try failure into bear strength. Don't chase after it, right, into that bear pullback. Again, targets now down to that 67. That's if price goes higher, right? Price goes higher, buyer failure, seller strength, seller pullback, and back down. What if price goes lower here though? What if it keeps going lower here? Then what do we do there? Well, now remember, this is why it was so important why we want to know where the objective is, right? The markets are always moving with a purpose. It may not seem like it at first, but the markets are always moving with a purpose. There are going to be two main things I'm looking for if the price goes lower. One, the main thing I look for now are traps. Anytime I find myself in a position where I don't have any option but to sell low, right? If it just goes lower and we don't pull back, the only option down here is going to be to sell low. I don't want to sell low. It's just not a good habit to get into. What I'd rather do is sell high, right? And how do we sell high? We use what I call a trap pattern, right? A trap pattern. Now, oftentimes you can combine those trap patterns along with a hidden channel, right? Draw out the channel off of that low up to that high, and a lot of times you can combine those traps, right, along with the high of that channel. So that's a great way, again, if we don't get the pullback and the market, right, runs lower. Last but not least though, maybe not last but not least, two more things. One, what if it goes sideways here? It does look like there's potential this market may be going sideways here. So if we start going sideways tomorrow, as people kind of are paralyzed, kind of waiting to see what Florence will do, the storm Florence will do. If it goes sideways, fine. We're still bearish, and we're still going to use what we call the two-try rule, right? We talk about this quite a bit in this newsletter, right? That's a one try, that's a two try, and a back down in, right? One try, two try, and then back down in. Look to sell that two-try rule. And again, you'll notice all of these patterns, right? All of these patterns, whether it be up and back down, whether it be sideways, up and back down, or whether it be down and then back up, right? You'll notice the goal is to follow momentum, sell at resistance, right? And then incorporate that resistance with one of my favorite entry patterns. Would you like to learn those patterns? Because I've got a great free trading course for you to learn all about those patterns, guys. If you want to learn all my favorite entry patterns, if you want to see hundreds of examples of those patterns to really kind of nail down what I'm saying here tonight on this newsletter, and also to help you improve your trading here every day in your account, right? Grab that free course in the upper right-hand corner. Not to worry, I'll be here when you get back, right? Pause the video. I'll also link it up in the description of this video if you change your mind and you want to take me up on that offer later on in the video. So grab the free course. It'll be there for the rest of the video. It'll also be linked up in the description as well. Last thing here, though. Last thing. What does it take for a reversal? What does a reversal look like? Is it just a strong move higher? Is that what it is? No. I've got to see three things. In fact, we call this a 1, 2, 3 reversal. And I say that with a little bit of chutzpah at the end, right? A little bit of exclamation at the end, right? Because of course, right, it has to have a little bit of that punch to it, right? It's got to have that punch to it. So as we go up, right, strong move higher, pull back to the moving average. That's the key. Pull back to the moving average and strong move through. That's the key to a reversal, right? First things first, strong move higher, right? Second thing, pull back to the moving average. Third, strong move through. You can see the example of the back here, right? Strength, pull back, strength. Once you see that, find that new channel, buy the low of that channel, right? Buy the low of that channel, buy the failure, right, to retest that high. All the day's work here for the bulls, right? Strength, pull back, strength. Find that new channel, buy the low of that new channel. If it pulls back, 1 try, 2 try, failure, back up we go. You can see it right here, right? We get the 1, 2, 3 reversal, draw that channel, buy off that low. Once it pulls back, failure, and back up. And again, don't take my word for it. Grab that free trading class. Okay, it's in the description. It's in the upper right-hand corner, right? And you'll see literally hundreds of examples of the exact same pattern that I just talked about. All right, let's keep going here. We got the crude out of the way. How about some S&P? S&P, the E-minis are pretty range-bound here. You can definitely tell these markets are waiting on something. We've got some inflation numbers out later on this week. That might be what they're waiting for. We're hearing rumors right now of some fresh round of tariffs between the U.S. and China. So there appears to be a little bit of a stalemate right now on the S&P and the Nasdaq, but not to worry. I got a good plan for us. S&P is range-bound with a trading range and a triangle on the chart this evening. The range at this point, the range is pretty much the big clue with both the bulls and the bears kind of both making an argument for who has control of this market. I do want to bring your attention, though, to the fact that there's actually a larger range here, too. Right? There's actually a larger range, right? There's a larger range, right? And so, of course, whenever you see a range, I want to buy the low. I want to sell the high. And how do we do that? We focus on failures, right? That 2-try rule we just talked about, right? 1 try, 2 try, back down in, 1 try, 2 try, back up in. You can see examples of it here. 1 try, 2 try, back down in, right? Same thing down here. 1 try, 2 try, back up in, right? So buy low, sell high, and we're trying to avoid the middle, right? Now, without anyone in clear control, buy low, sell high, avoid the middle until we get enough strength for what we call a 1, 2, 3 breakout. So as I go zooming back in on this, now it's quite easy to see how we can combine these two ranges. Again, the small range here and the larger range here. Okay, the sell side is going to be the easier side here. Most recently, we're going lower into this little short-term range here. So again, the key is use what we call the 2-try rule. And again, you can see example here, 1 try, 2 try, failure back down, right? I want to see us go up. That strong move higher will get the buyers trying to buy breakouts, right? Try to buy that pullback. Once we see those buyers now, again, try once, try twice. Then we know if we start to collapse off this high now, we know now that buyers are not going to give this much more room to breathe. They're going to cut their losses early, right? They're going to liquidate those longs, and the price will collapse back down into that range. So that's the plan, right? That's the goal of this. Another option would be a one try, two try, failure, and then if we can, this is always a bit tricky. We'll see if we can get the pattern. We'll look for that pullback, right? Back off that underbelly. You can get to see what they did here, right? 1, 2, down. See how they try to keep selling off the underbelly there? That'll be the same idea, right, for tomorrow. And I'm not, as you can see, I'm not making this stuff up, right? You can see examples of this all over the place. You just have to know what you're looking for, right? Got to know what you're looking for and the best way to trade it. And again, you'll learn more about that in my free trading course. So we have this, right, one try, two try. We're basically looking for another round we saw earlier, right, in today's session. Now, going lower, you got to remember this big, right, this big range here in the middle. It's going to be nasty in that middle, right? It's the middle of the range. We don't want to trade the middle. We want to buy low. We want to sell high, right? So the way you want to do it is if we go lower here, one try, two try, right, and then back up. Once we see that one try, two try, right, and this may not be all the way down to that 28.70, right? It may be one try, two try, and back up from there. That's perfectly fine. But I want to focus on really trying to buy as low as possible here tomorrow. And again, we also potentially for a triangle here, you got some lower highs, some higher lows. This may end up going sideways right in that middle, right? So if that's the case tomorrow, if we start going sideways right in that middle tomorrow, it's the same, pretty much same plan, right? One try, two try, back down in. One try, two try, back up in. Stay away from the middle, buy the low, sell the high, use that two try rule. And then eventually we will get a breakout. What does a breakout look like? Well, remember how I said the 1, 2, 3 reversal has some strength to it? Same thing for a breakout, right? You'll notice, good example back here, right? Nice strong move up. Surely that was enough to break out of this range, but no. And that's exactly what we look to avoid when trying to trade breakouts. 1, 2, 3. We've got to see this keep going here, right? We need to see basically these sellers walk away. I need to see the sellers on the tape, right? Literally go, I'm out of here, I'm done, and walk away. And that will allow that market to break higher. And then once we see that break higher, and again, let me look at this back here, right? Some poor sap, right, bought that breakout. They did, right? They had their orders waiting to buy above that high. I know, I did it too when I was in your shoes. We all did this stuff. We all made these mistakes. Just like crossing the street without looking twice, right? We all kind of make these mistakes, until we learn our lesson. So again, 1, 2, 3, nice strong breakout. What are we doing? We're looking to buy the low of that channel, right? Buy the low of that channel. And then again, watch out, right? Watch out for those failures too, right? Nice deep pullback, failure, and then back up, right? Back up we go from there. Those are really powerful trades, right? Buying off the low of that new hidden channel. And again, the two try rule, the seller failure below the moving average. And again, I know I'm speaking terminology you probably haven't heard before, especially if you're here for the first time today. And that's exactly why I have that free trading class, right, linked up in the description for you. That way you know more about the plan and all the terminology and all the patterns on this nightly newsletter. All right, let's keep going. About some Nasdaq here. Nasdaq, this is just a beautiful chart. We're range bound. We get a triangle, a trading range, and a pendulum swing. The triangle is pretty obvious. I think the triangle is rather obvious here. We get some higher lows, we get some lower highs. Now, that means ultimately this market is getting narrower with each candlestick. Now, that is important because basically triangles tell me two important things. First of all, while the triangle is wide enough, I can fade these breakouts. Right? I can use the two try, the one try, the two try, back in. I can use the two try, the one try, the two try, and back in. I can buy low. I can sell high, right? And I want to avoid that middle. when the triangle is wide enough, there is enough sheer size for the market to move back and forth, right? When the triangle's large enough, there's enough potential for profit. But once the triangle gets nice and narrow, right? Once you're playing bumper cars, right, inside of that triangle, nobody with any experience, right, experienced traders, they know better than trading in tight ranges, because tight ranges always respond with expansion, right? In fact, a lot of people are calling for a relatively expanding market into the end of the year, right? If you recall, this seems like a long time ago, right? But if you recall, right, last year really, really wide, right? This year we're narrowing out here as we went into the spring and the summertime months, right? We're getting really, really narrow right now, some real small ranges on the commodities and the stock indexes. What's going to happen is eventually it's going to start widening out here again, right? And we'll start getting some really big moves again. And if you ask my opinion, just wait for October, November, December into the first quarter of next year. I think we're going to be seeing some really volatile price action because of that phenomenon. Now, so once we get narrow here, then we're expecting to see that big breakout, right? That big breakout in one direction, right? So once that triangle completes, right? Once these two lines get closer and closer together here and nobody has enough incentive to trade inside, well, now I can expect to see a breakout, right? One direction or the other. So this tells me I can take advantage of the range in the short term, right? In the short term, I can one try, two try, failure back in, right? I can one try, two try, failure back in. Stay away from the middle, buy low, sell high. But if we end up sitting here for a while tomorrow, okay, if we end up sitting here for a while tomorrow and we go sideways, we're talking 9:15, 9:30, 9:45, 10 o'clock. If we are consolidating before 10 o'clock, let's put it this way. If we go into that 10 o'clock shock, which I talked about earlier this evening in the newsletter, right, I would be keeping an eye on a big breakout here, right? And remember, it's got to be a real strong break, right? It's going to be real strong. And what we're looking for is with that big strong break higher, what I always like to do is look for that big strong break higher. I like to look for that little pullback below the moving average, a little failure there, right? And then grab it up from there. Okay, so if we do see that, I mean, we're talking strong, right? And this will be after we get to the end of that triangle, not right now, right? But we get to the end of that triangle tomorrow, right? Oh, hold on. End of that triangle tomorrow, we see that big jump, right? We're talking rip your face off, extremely strong run, right? The easy money trade is always that little hook and ladder below the moving average, right? And then jumping back higher. Then we find that new channel, right? And we go looking for the buy off the low of that channel, right? So there's definitely a sequence you can follow. And again, if you get this triangle to consolidate enough, and then we get that bam, right? That big break, right? Once that triangle's there, look for that run. Again, that little hook you in, right? Now you see me, now you don't. Little head fake below the moving average. One of my favorite patterns, that little seller failure below that moving average, right? And then again up, right, for the buy off the low of that, right, of that channel. So that'll be a good one there. And again, that'll go for both sides, right, of this market. So get to it early tomorrow for fading the breakouts. Late in the day tomorrow, we're obviously going to be waiting to see here if we get that breakout after 10 a.m. tomorrow morning. And then, how would we break out without a completion of this triangle? What does a breakout look like? Again, assuming that we get to the vertex here, then we can trust a breakout. But if it just breaks out here, what do we look for? A 1, 2, 3 breakout, right? 1, strong move up. 2, pull back to the moving average. And 3, right, is a strong follow through. If we get that, now again, we can find that new channel. We can buy off that channel. We can look for that failure, right, below the moving average, and look for buying opportunities as we go higher here. All right, and it wouldn't surprise me. It's been pretty consolidated here lately on the Nasdaq. Hopefully tomorrow, today, this thing breaks higher. If not, though, don't force it. And remember, right, if you want to see lots more examples of how we trade triangles every day in our trade room, right, grab that free trading course. It's linked up in the description, right? It's in the upper right-hand corner, right? Grab it and invest the time, invest your time, right, to improve your results here this week. All right, let's keep going. How about some gold right now? How about some gold? Gold is bearish with a channel, a measured move, and a round number on the chart this evening. The bear channel is a big clue because it's so flat. You can see this big, right, flat bear channel. Now, what's my definition of flat? If you draw a 45-degree angle, right? What is a 45-degree angle? A 45-degree angle, right, is right from the corners of this screen right now, right? So anything less than that is not going to be, in my opinion, is not considered to be a very strong trend. Okay, so I've got that trend now. It's not a 45-degree angle. It's almost flat. And what does that tell me? It tells me the trend is weak, right? And what does that tell me? That tells me I need to focus on selling as high as possible, right, tomorrow morning, most likely using the 2-try rule, because a channel like this is almost like a range, right? I mean, it really is. It's almost like a range, right? Imagine how you trade a range. Well, I don't know how about you trade a range, but how I trade a range is I look for the 1-try, 2-try, right, back in. 1-try, 2-try, back in, right? 2-try rule, fade the breakouts, right? As you can see, this is similar, right? If we went just a little bit, bearish, right? It's almost a range, right? There's your, again, it's not a true range, but it's almost a range. It's a channel. It has a bear bias to it. But look at how much space is open back and forth. What that means is that not only could I buy this market, 1-try, 2-try, but I can also sell this market, right? I can buy as we come off that low. If we overshoot that low, I can buy with that momentum swing back up. I can also sell, right, on the way back down, right? I want you to appreciate that for a moment because this is a really big clue. And, you take these personality clues and they help you formulate a good plan of attack each day. The strength of this channel allows the buyers and the sellers to participate in this market. Okay, here's an example. If we see it go like this, right? If we see a channel that is really steep like this, can I do the same thing, right? Could I buy off the low, right? Could I buy off of this low? I could, but I'll tell you, there's not much space there. Right? There's very little open space there before this thing comes crashing back down again. So when you see a strong channel like this, a strong trend, a steep channel, right? A strong trend like this, what it really tells us, guys, is that there's only one side of the market here, right? This is a one-sided market. It's just the sellers. Okay, you can't make any money as a buyer here unless you're taking profit on your shorts, right? But with a almost flat channel here, though, right? With that flat channel, now you've got to be aware that there are going to be buyers in this market. So trying to be aggressive selling down here is a fool's game. I want to be patient and sell high, right? Because that's where the buyers aren't going to be, right? The buyers aren't going to buy high. They're going to buy low. So for me trying to sell low tomorrow, that's why I say it's really important tomorrow morning when you see a channel like this and you got that narrow trend or that flat channel like this, that weak trend, it's really important that we try to sell as high as we can, right? And you're going to see lots of these patterns here, right? We go up, 1-try, 2-try, back down, 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 right? That's the name of the game here on the gold right now, right? I want to go up, 1-try, 2-try, back down, right? And again, if you want to play with some fire, if you like a little bit of risk in your session tomorrow, right? 1-try, 2-try, right? Back up in. You can see there's enough room there. I'm always somebody who believes in following that trend. So bear channel, big clue. Where's the target? The target for the sellers is easy right now because you got that measured move. 1, 2, 3, and then look left. Where does it put us? Yeah, we go back to September the 4th, right? Base of the weekly low last week, right? That's last week's low. So this is very similar to crude oil, where the fact we went down, right, most of the week last week, right, bounced, and now we're trying to finish off the retest of that low. So 95-ish, 95.1, 95.2 is the objective for those sellers. It's important that we always know where the objective is. Why? Because we don't want to sell into the objective. I want to sell high, 1, 2, right? I want to sell high, 1 try, 2 try, sell into that failure. Don't chase after it. Find that new channel. Find that new channel. Look to sell off of that resistance area, right? Off that resistance area, and we're back down to retest low, right? So failure into strength, strength into pullback with a retest of that low. What if we don't pull back here? What if we don't pull back? What if we keep on going lower here? What if we keep going lower here? What if we don't get a pullback? If we don't get a pullback, we know the objective is, right? Start looking for traps. Anytime I have a situation where the only option is to sell low, I wait for traps, and you'll get them. You will get them, guys. You'll see lots of examples, right, where the market is just about to reach its target. And again, you have to always know where the market wants to go. In a trending market, it's usually going to be a measured move, a channel rotation, or a retest of a high or a low. We've got a channel rotation, a measured move, and a retest of a low, all down around that 95 area. So you really got to be careful selling too low tomorrow. Last but not least here, how do we reverse? What's a reversal look like? What's a reversal looking like here? Yeah, you know what it is, right? Yeah, strength, pullback, strength. Absolutely. Find that new channel. Looking to buy off the low of that channel. And then remember, usually once you get that, right, that next leg higher, usually it's a sharp pullback, a 2-try failure, and back up we go from there, right? So it's going to be a pullback, right? Buying that pullback and then buying the seller, right? Buying that seller failure, right? We see a lot of that stuff where the market will collapse, find that new channel, right? Sell off the high of that channel, back down to retest that low. These patterns happen over and over and over again. So relatively easy here on gold. Sell high, right? And we can thank the channel and the slope of that channel for telling us exactly where to be looking to sell high. How about some euro tonight? Wrapping up tonight on the euro futures. Euro is bullish with a strong move higher, a trading range, a hidden channel, and a reversal line on the chart this evening. The strong move higher, right? It's pretty easy to see, right? This little short covering rally. Strong move higher gets the momentum clearly on the side of the bulls, right? They're swimming with the current now, and that tells me to look for buying opportunities at support levels. Now, anytime we see a reversal on the trend, it's a little bit too steep for a hidden channel right now. You can see they already bought that hidden channel once, a little bit late in the morning there, right? I'm going to go out and find another hidden channel off of that high. That is lovely hidden channel there. I also like the fact, right, that we have that reversal line there as well. So these two areas right here, right, reversal line, low of that channel, this whole area here, right, I'm really hoping we get a nice pullback right into that low. Again, I want to see a buying opportunity at a support level. So once I pull back to support down here, then I'm looking for my entry. And my entry, whenever I am below the moving average and the market's bullish, okay, I'm below the moving average, the market's bullish. What I'm looking for here is I'm looking for those sellers to try to sell that pullback, right? Now, why would I do that? Well, because that way, first of all, if we see a strong move down, you know you're going to get somewhat of a fight, right? You know the bears are not going to let it, most likely, they're not going to let it go straight through like this, right? They're probably going to try to make your life a little bit more difficult, right, as a buyer. So the bears come in, they try to sell high, they try to sell, right, maybe at this little swing here as well, right, and they're trying to push this market lower. That's perfectly fine. The momentum is not on their side, though. The momentum is on the side of the bulls. I also know where there is momentum, there is probability. So now I know exactly where those stop losses are, right? We know where those stops are now, and now I can buy right into those stop losses, okay? That gives me a definite edge because now the buyers are buying the low of this channel, and at the same time, right? Not only the buyers buying the little channel, but now the sellers are buyers now, right? So the buyers are buyers, the sellers are buyers, everybody's a buyer. And where should we be trying to go here? Yeah, we're probably going to end up back into that range, right? Kind of the opposite of what crude oil did, where crude bounced higher on non-farms, the euro took off lower on non-farms, and now we're trying to make up, right, for that lost ground and go back up into that range. So I'm definitely looking for a big target, sorry about that, a big target up top here around that 16,600 area, right? And this could really get good here for those bulls if we can get this price one try, two try, failure, strength. Again, find that new channel and we're buying up from there. Now, what if we don't pull all the way back? What if we don't pull all the way back? What if it just jumps higher here? Then what, right? Then what? Well, then we're going to have to pull out another stop, right? If it doesn't pull back here for us, if it just jumps higher here, I'm then going to look for a new channel, right? And I'll look to buy the low of that channel. And it could be even stronger, right? It could be even stronger here like that, right? And we're looking for a steeper channel, looking to buy the low of that channel. What entry pattern we use on that? The same pattern as always, right? It's that one try, two try, failure, strength, pull back, right, and back up we go. I'm always trying to catch the opposite side of the market, right? I'm always trying to catch traders on the wrong side because it just slingshots the trades right towards my targets, and it makes for an easy, right, easy, profitable opportunity. Last but not least here, how do we turn bearish, right? How do we turn bearish? A whole hell of a lot of momentum has to go back to the downside right now, right? So all that momentum going higher here, you can expect buyers are waiting to buy that pullback. We'd have to go strength, pullback, and then strength, and then you know the drill, right? That brings in the new channel, find that channel high, looking to sell off the high of that channel and back down to retest that low. All right, guys? So we got the potential reversal, but for right now, though, we're looking for that, right? Looking for that channel off of these lows here, right, off that reversal line, down around that 16,000 area, or down around the 15,900 area, and look for that move back up into that range tomorrow. We do have some rollovers this week as well. The currencies rolling over, I believe it's the 14th. The 13th is rollover for the E-minis. So you're probably going to start getting some emails from your broker. If you're not getting emails from your broker, might want to make sure you're getting emails from your broker because they're going to be looking out for your best interests. You want to make sure you're getting those emails from your broker. They will remind you about contract rollover late this week. Next week is rollover on crude oil. This week will likely be the currency futures and the stock index futures. So keep an eye on the chart or on the rollover as well. Guys, we laid out the plan tonight. Great plan of attack for tomorrow. Come see me tomorrow morning. Let's trade this strategy together in the trade room. I've got a great free trial if you want to see what we're all about here at School of Trade. If you want to get registered, our most popular package is an all-inclusive advanced class here at SOT. You can find more on our website. I'll link it all up in the description of the YouTube video. Give me a call, send me an email, right? Drop me a Skype message, whatever the questions might be. I look forward to seeing you tomorrow morning in our trade room. We'll be executing this strategy with you guys and gals and all the advanced members tomorrow morning at 8 o'clock Eastern time. If I don't see you then, hopefully you guys will come back and see us again tomorrow night on our next edition of our nightly newsletter every evening, Monday through Thursday before 8 p.m. Eastern time. My name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.